Okay, folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond, the Contrarian Trader. And what we're going to talk about this week are A, how did we do last week? Why are you listening to me? B, we're going to talk about threats to this market. I have two primary concerns that could, actually three, because the Iranians just seized another tanker. So let's make that three. And we'll talk about signals by the market that are being ignored from the bond market, from the commodities market, that should have everyone concerned that we are on the precipice of a recession. So let's begin with how we did this week. Here's a list of our closed positions. We closed out CMG. I spoke about CMG last week as a potential long trade, maybe 2 weeks ago. And we opened up a position. We were up on it, then we reversed, and that turned negative. I said, you know what? First out, best out. Let's take risk off the table. And we kept that loss very, very small. USLV, we booked a profit last week of 16.44% on that trade. And we closed out Kansas City Southern for a 4.59% loss. But they remain on our watch list as a potential long trade as we proceed into the coming week. They reported earnings on Friday. The price behaved well. And finally, we closed out the SPXL trade, which puts you long, leverage ETF, putting you long of the S&P 500. We booked a profit there of 2.39% on that particular trade. So what about our core positions? Well, USLV was a core position, but it became overbought, so we unloaded those shares. I plan on reloading back up on silver, but at lower prices or on a consolidation and subsequent breakout on those shares. We'll talk about the chart. Secondly, NUGT. We were up on this core position. I've been talking about NUGT for a couple of years now. And last week, we're up 20% on that position. Year-to-date, NUGT, on the shares that we came into the year with, those shares are up 100.67% on the year. Our total investment in NUGT is up around 82%. Why is that less than the yearly result? It's because we added more throughout the course of 2019, thus diluting our results, but still 82%. Nothing to sneeze at. And we'll talk about these charts in a moment, but first I want to talk about what is concerning me about this market. We're going to start with a chart of the 10-year yield versus crude versus the S&P 500. And we have traditionally seen a correlation, meaning a rising yield correlates with the rising stock market. And you may say, that doesn't sound right, Bob. Why would that be? The stock market likes low yields. Well, we've had low yields. And traditionally, when yields are rising, they rise because the Federal Reserve is confident that the economy is doing well. But the economy is not doing well. But the problem here is that the stock market has continued higher, and we've pressed on to new all-time highs, and we are ignoring the signals by the market that all is not well. Now, think about the 10-year yield last week. We were told by Fed Chair Williams, he slipped, expect zero interest rate policy. Then they backtracked that after hours. Then I think it was Bullard the following day. I could be wrong on that. But one of the Fed officials came out the following day saying it'll be a 25 basis point cut in July at best. So they even walked back a 50 basis point cut. So the Federal Reserve is kind of losing control of the narrative. And the reason why I say that, it was only a few months ago where they were saying that the reduction in the Fed's balance sheet was on autopilot. Fast forward only a few days later, okay, we're going to stop dumping bonds off of our balance sheet. And now they're talking about rate cuts. So they need to get their act together really fast, because if the markets sniff out that they do not have their act together, they are in all sorts of trouble, because they rely upon the confidence that the market has in them. And remember, this is what I expressed to members on the week ahead commentary yesterday. The first three letters of the word confidence are C-O-N, con. It's all one big con game. Have little doubt there will be zero interest rate policy coming out fairly soon. But keep in mind what's going on here. Why are yields dropping? They should have spiked up higher. last week because zero interest rate policy was taken off the table. The best that we could hope for was a quarter basis point cut in July, yet yields declined. When it comes down to crude, the Saudis, OPEC, has cut back on production. What did oil do last week? It dropped. The Iranians are seizing tankers. We're knocking drones out of the sky. They knock one of ours out of the sky. What's the price of crude doing? Dropping. Why? That's a tell. It's all a tell. Crude should be spiking higher right now with all the production cuts and all the saber routing and the probability of war in the Persian Gulf. No, crude is pulling back. Why? There's no demand. Yet, the S&P 500 pressed on to new all-time highs last week. It's all about the Federal Reserve and the big con. And here you have it. Even on Zero Hedge, if I remember, I will post this in the description area on YouTube and on the blog as well. Fed flip-flops and the battle for control. They need to regain the narrative. They need to get their act together. And this quote is exactly right. The writer states, let's call a spade a spade. The markets would not be anywhere near new highs were it not for the Fed flip-flopping and racing from dovish media event to dovish media event. It's all about the Fed, folks. Another fly in the ointment out there, besides tensions with the Iranians, besides the Federal Reserve and their policy changes and their misspeaks and then backtracking, you need to keep an eye on Deutsche Bank. So I've been talking about Deutsche Bank. We're going to go over a chart of this in a moment. Deutsche Bank has $49 trillion in derivatives. They are by far the largest bank in Europe. The book size that they have in derivatives is equal to JP Morgan, which is the biggest derivatives book in the world. Then comes Morgan Stanley, Goldman Sachs, all the big players, Bank of America. The question that everybody should be asking themselves is this. If Deutsche Bank is allowed to go under, which I do not believe they will allow them to do because they can't, the question you are going to hear, if Deutsche Bank begins to make new lower lows, who has counterparty risk to this $49 trillion? Who is on the opposite side of the trade? And you could bet a lot of the American banks do have a ton of exposure to Deutsche Bank. Let's get to the charts. And this segment of Best Stock Charts is brought to you by TrendSpider. TrendSpider is the next level in charting software, automated technical analysis. We are a partner of theirs, a proud partner. I believe in the product so much that I have incorporated it into our silver and gold level memberships. So if you sign up as a silver or gold level member, you get TrendSpider for free. And if you're not ready to take that path right now, that's fine. But you do want their product, we have a deal with them, 25% off. If you're watching this on YouTube, just click that link below in the description area. It'll take you over to their website. If you watch us on the blog, the link is above. And enter discount code CT25Z. Again, CT25Z. Get TrendSpider. Okay, so Deutsche Bank, this is a daily chart. Now, earlier in the month, they came out and announced that they were laying off. It was a Sunday night. They are laying off around 20,000 employees. They're exiting the equities business globally, and the shares have moved higher on that news. But when you take a look on TrendSpider, what you can do here is just click a button right here, daily trend lines, and there you have your support and resistance levels. Automated, folks, big time saver. We broke down below support on Friday. So has the rally run its course? There's a good chance. And what I will point out is this, is that you have lower highs on RSI, lower highs on stochastics, and they are rolling over. We had better hope for higher lows here. Both RSI and Stokes need to hook back up. And at current, it does not look promising. You saw that we rallied here on the 16th up and into resistance. We were rejected. Now we have broken down below support. So when do you know the shares of Deutsche Bank are in big, big trouble? Let's take the daily trend lines off. We're going to stay on a daily chart, but now we're going to overlay weekly support and resistance levels. When you want to get nervous about Deutsche Bank is when we begin to break down below this support level here in dashed blue line. That means that in all probability, we are going to take out the lows of July the 9th. If we take out the lows of July the 9th, we're coming down here, which is a declining support level. And if that breaks, you could expect that we are going to challenge the June lows, which is at 6.61 per share on Deutsche Bank. And if we begin to flirt with a 5 handle on Deutsche Bank, you're going to see nothing but sell orders come in. Why? Many funds are not allowed to own stocks by charter that are below $5 per share. You're going to see liquidation, forced liquidation in Deutsche Bank. The headlines are going to pick up on the panic, and the question's going to again be, who has $49 trillion worth of counterparty risk to Deutsche Bank? And last week, again, going back to JP Morgan reported very good earnings, and their share price did nothing, and it appears as though they are going to pull back here. Note the lower highs on RSI and lower lows. So we're losing momentum here. The stochastics are rolling over, lower highs, lower lows. So this is not good. Now, so far through this conversation today, we have been somewhat doom and gloomish. Let's talk about how we push back against recessionary threats, how we push back against the Federal Reserve, which is, I won't say in turmoil, but the wheels are starting to come loose, and it's a bit concerning. And how do we push back against geopolitical risk? And there's a ton of it. You want to take a look at what we've been looking at for quite some time because we've been expecting it. I post these videos constantly. Just go back, check my track record. I've been bullish on gold and the miners for years now, going back to 2015 when they first started raising rates. NUGT went from the teens up to well over $100 a share. I think 142 was the high, and we were long of it throughout the entire time. Now, fast forward, we have enjoyed this huge rally. This is a daily chart. I have weekly overlays here. Again, I need to point out the power of TrendSpider, okay? Here's a daily chart. This is such a big time saver. You want daily support and resistance levels on this daily chart? Great, there you have them. It shows that we have some room to move higher here, and that's all good stuff. However, what I profess, and this is what TrendSpider has delivered for my style of trading, is I profess multi-time frame analysis. And they even have it up here, MTFA, multi-time frame analysis. What I like to do is, okay, here's a daily chart. We know where our support and resistance levels on a daily basis, but where are we on a weekly basis in terms of support and resistance levels? Simply come over here. This can get noisy, so we're going to take daily off. Note how there's solid lines. And we're going to now click weekly, and there you have it. In dashed line above, we have a little bit of room to go here. It looks as though we tapped weekly resistance last week, and that's why we got the pullback. Now, what we did last week is that we did sell some covered calls to hedge our position. We sold the weekly 40 strike expiring on the 26th to bring in some income and just hedge this position a bit, because if you go back in history on NUGT and you take a look at how the shares react after hitting the third standard deviation Bollinger Band on a daily and 4-hour basis, normally you get a pretty severe pullback. Now, I think that given the headline risk, you'll probably see a flight to the dollar tomorrow morning and probably a flight into safe haven assets, gold, silver, tomorrow morning as well, given the events unfolding over in the Middle East with the seizure of another UK tanker, I believe either last night or today. So this is the third one. Now, if they release these tankers by tomorrow morning, no big deal. We're all good. So NUGT, we remain long of it. If you're looking to buy it right now, you can't. It's too extended. You're too late. Wait for the pullback. We're going to be looking to add more here. This is a core position. This is not a position I want to hold for a few days or a few weeks. I want to hold this throughout the duration of what I perceive to be a nightmare scenario unfolding. They are going to go to ZIRP, zero interest rate policy, very, very soon. And what's going to happen when they do that? You're going to see gold, silver, the miners. They are going to rip through the ceiling. You haven't seen anything yet. But if you're short-term swing trading, if you're looking to buy now, You're taking on way too much risk. Wait for the pullback. Join the Contrarian Trader. We'll send out an alert when we add more to the position, when we hedge the position, and when we sell the position. Let's talk about USLV. Now, we've been long of USLV for a while now. We added more a few weeks ago prior to the breakout. And you could see, this is a daily chart here. You could see on a weekly basis, we'll use the automated trend lines, that you saw some buying begin back here as we toyed with this lower band of support on a weekly basis. And then we dropped down on the 28th of May. Now you can see right here on the 28th, we hit weekly support and then we began to rally. And we did ultimately break out, but then we gave up that what should have been a support level became resistance yet again. But we had support at the rising 20-period moving average, which is in black line here. And then ultimately we did break out yet again. And what you would have been able to do if you had TrendSpider is you could have, rather than sitting in front of your computer hoping that you were there the minute that the shares closed above resistance, all you needed to do was set an alert. And I would have kept it on a daily basis because I would have wanted to have seen us close on a daily basis above this resistance level. And you could have just set an alert, USLV, weekly breakout. Make yourself a note because this comes to you via email and text. Now, if you would have received this on a Monday, you wouldn't have wanted to just go running in and purchasing the shares. You would have wanted to wait until late in the week, Thursday, Friday, to ensure that you had a close, a probable close above the support level. And there you have it, folks. Set it and forget it. And you could have done the same thing up here. You could have added more, and you would have been long of USLV using automated technical analysis, and you would have enjoyed this rally higher. Now, we booked profits here as we pierced and closed above the upper band of the third standard deviation Bollinger Band. Yes, we had a move higher the following day, but it was an outside reversal day. In all probability, we're going to get a pullback. We're going to be looking to buy that pullback. And again, silver, USLV are core positions. If you think that this rally has been nice, you haven't seen anything yet. It hasn't even begun yet. Talk about being in the nascent stages of a massive breakout. Simply take a look at silver on a monthly basis. Look at this consolidation. Look at how tight these Bollinger Bands are. Take a look at what's going on with RSI, higher lows, and now higher highs. We have broken out on RSI monthly basis, only a few days left to go in the month. Take a look at your Stokes, higher lows, and now we have higher highs getting put in. No breakout yet on Stokes, but folks, this is coming. This is reality. You want to know how fortunes are made in this market? You're looking at it. Nobody's aware of this. Nobody's paying attention. Some headlines, you're probably going to get a pullback here on silver. They'll stop talking about it. We won't. We're looking for the opportunity of a lifetime to get involved with these positions early in a major league breakout. Take a look at this volume. We haven't even closed out the volume for the month of July yet we're about 15, 20% higher than we were last month on a closing basis versus June. I mean, this is powerful signal by the market here. You can't ignore this. Now, to illustrate the power of this chart, I'm going to take off the linear view, and you can see that we are ripping higher here. We have new monthly highs. We closed at a monthly high not seen since February. We do have the 20-period moving average, which is flattened out here. We're testing it. We'll probably get a pullback later this week, perhaps in the first week of August as well. But I think that we are breaking out. We have a price target here on silver in the short term. And no kidding, short term, $97 per share on USLV. Where did we close out the week last week? $77 per share. Now, going back to a daily chart here a moment, another tool that TrendSpider has that I like is heat mapping. And this is another powerful tool that you could have used to help identify where we had congestion, meaning overhead supply, support, resistance. And as we broke out of this trading range, well, then you knew that you had resistance above, as highlighted here. What happened on June the 7th? We tapped this heat map, we tapped this resistance level, and we pulled back. Ultimately, we broke out, flirted with the heat map again, and then found support and ripped higher. Where are we finding new resistance now? Right at this higher resistance level. So the heat map feature is a very, very powerful feature. Automated technical analysis, folks, it's the future. And you may be saying, why do you keep drawing your own lines if it's the future? The reason is that I am a control freak. What I like to do is draw my own lines first, and then I like to validate the accuracy of my lines using automated technical analysis, because sometimes I don't see certain setups. And that's the value that TrendSpider brings. Let's bring up KSU. This is a watch stock. We were long. We got stopped out. All right, so daily chart. We got stopped out here on this gap down and reversal day. It undercut our buy point. We were up on the trade. It turned negative. I don't like a winning trade to turn into a losing trade, so we stopped out of the position. So the following day, we had an inside day, Friday earnings, and the shares rallied. Do I want to go running in on Monday morning, opening a new position? No, I want to wait until I see that we can get a continuation move higher, because the Dow Transports did not have a good week last week. So here's my manual trend line. Let's overlay daily support and resistance levels using automated technical analysis. And there you have it. I'm spot on here. So here's our resistance level. We have actually two. One was a prior lower band of support, which is now going to act as an upper band of resistance as well. So I want to see a close above 124 per share before I get along of KSU. And I also want to see the transports get a bid, because they did not have a wonderful week last week. Now, the next chart that we're going to talk about is CMG. I like CMG, but Friday's price action was very, very concerning. Again, this is another one we stopped out last week. You want to keep your losses small, folks, especially in this environment. So let's take our crayon out. You can see that we had a nice consolidation here. We broke out. Here's where the things get sticky. I'm going to use the automated feature and use a daily chart. However, I want to use weekly overlays to show where weekly support and resistance are. So we rallied last week. You can see up here in gray, we had a breakout, but that breakout failed to hold. So that's a breakout point failure, also known as a bull trap. So not only did we fail to hold support on Friday, we broke down below another weekly support level. That's a concern. Now, if we gap up on Monday, that's fine. All is forgiven. We'll look for another breakout here. But if we put in a new daily low on Chipotle, in all probability, you're going to see some sell programs move in and take Chipotle down a few points. And I would look for support here at the 726 level, at the 724 level. In fact, let's create an alert. I want to know when this happens, so I'm going to keep this really tight in terms of when I want to be notified. So within a 5-minute time frame. Okay, so here's my note to myself. That way I don't need to reanalyze the charts trying to figure out why I set the alert. So CMG, my alert's set. I'm ready to go for the new trading week. Now, the last chart we're going to go over here is emerging markets, folks. As we proceed into a new zero interest rate environment, I want to show you from a higher level view what's happening with emerging markets. Emerging markets are putting in higher lows. This is a monthly chart now. Keep in mind what we're looking at here. It's not a daily chart, not a 5-minute chart. This is the macro view. Breakouts using a monthly chart, those rallies last up to years. And that's where the big money is made. So what we're doing here on a monthly basis using EDC, EEM probably looks the same, is that we have broken out in the month of July. We have given up a lot of those gains. We are now retesting the breakout point. The question is, do we hold? Do we close out the month above this upper band of resistance, or do we fail? So the key to watch here for emerging markets to be successful is the US dollar. And the dollar has a bit of resistance above. However, it closed out the week up last week. Now, when is it all over for the dollar? One could argue that it already is, and I'll tell you why. Many times, again, this is a monthly chart. Many times what happens is that when you get a breakdown, which is what you saw in the month of June, we closed below monthly support, the rising lower band of support in the month of June. Many times you'll get traders that are either dismissive of the charts, they're not watching the charts, they believe their own medicine men when it comes down to the fundamentals of what the Fed may or may not do, and they try to take the shares back up to new all-time highs, ignoring what has just happened. The reality is that we broke down below monthly support. Right now, we're struggling to recapture a monthly support level. There's a good chance that it does not happen. And if it does not happen, if we fail and we sell off to close well off the highs of the month, that is going to light a fire under the EDC. And that will push the shares back up higher. It will also light a fire under silver, gold, the miners, etc. And that is it for this week, folks. Everybody enjoy the remainder of your Sunday. If you have any questions, leave a comment, and I'll certainly get back to you. And if you're not currently a member, please sign up for the 14-day free trial offer. And don't forget to click that link if you just want TrendSpider. It's below on YouTube in the description area. And above, if you watch us on the blog, use discount code CT25Z. They have a 7-day free trial offer. With me, you get a 14-day free trial offer, and that includes, with silver and gold level memberships, TrendSpider. Have a profitable trading week, and I'll talk to you soon.